Hey guys, so a question was asked by Jason how I come up with the patterns, which is a really good question, and it's a decent place to start. So what we're going to do is we're going to cover where do you go to draw these patterns, and the platforms, and where are the tools. What tools do you want to use to create these patterns? And then we're going to look at the time frames to look at, how to spot the patterns themselves, to draw in the patterns. And then what do you do with that information? So first thing we're going to do is we're going to go to TradingView. I just want to show you this really quick. So this is where most of the metrics comes from. Most of the exchanges use TradingView. Now you can go to TradingView directly, and they have a free trial, but after that, you of course have to pay for it. So if you go to TradingView and you start using the charts on TradingView, so you just go to tradingview.com, you click on chart, and there's a chart. The first thing that comes up on this one is Apple. So TradingView does stocks and cryptocurrencies, everything. So if you want to look at Bitcoin, you just go over to the top of the list here and click on the little plus sign in the upper right hand corner where you add a symbol. And the first one that comes up is BTC USD. So that's Bitcoin against the US dollar. When you're trading on an exchange, you're not actually buying and selling with US dollars. You're buying and selling with a stable coin, or you're paired with another type of coin. So the best at the moment stable coin to use is Tether, which is USDT. The benefit of that is that when you are trading out of Bitcoin, for example, and into Tether, Tether is a stable coin. It's pegged to the US dollar, but you're not actually selling to cash. You're just transferring your coin, converting your Bitcoin into a different cryptocurrency. But it allows you to avoid losses. So when a market declines, you trade into USDT, you wait for the market to decline to a certain point where you want to buy back in, and then you buy back in at a lower price. So anyway, we click on Bitcoin USDT, and it wants me to sign in. Anyway, so I just wanted to show you this. But I don't use this because the exchanges allow you to use TradingView for free. So the biggest exchange is Binance. You just go to Binance.com. You click on Trade up here. Click on Classic. And you get access to all the tools without having to pay for TradingView. And you can see TradingView. And it is specific to the currencies that are on the exchange. So you don't have to sift through stocks and all kinds of other securities. So here is all kinds of numbers, all kinds of information. But what I want you to focus on is this chart that's in the middle. Okay. And then over here on the right, you can search for your cryptocurrency. But we're just going to go with Bitcoin because everybody knows Bitcoin for the moment. So you just type in BTC. And then it gives you all of the BTC pairs. So all the different currencies that have a pair with BTC. The top one is, of course, USDT. So you click on that. And it has Bitcoin USDT right here. So that's the chart. Now we're going to get rid of all this other stuff, all this distraction. And all we're going to do is we're going to expand. So we just expand it. Now it fills the screen. And we have all kinds of information here. So let me get rid of, these are things that I use. Okay, so here we are. We have charts. This is a 1 hour time frame. You can look at a 4 hour time frame. You can look at a daily time frame. You can look at the weekly. You can even go further. But if you go weekly time frame, this one goes all the way back to 2017 here. So August of 2017 until now. I mean, you can see a long history of Bitcoin, and you can see what it's done. But if you want to create patterns, you want to look at the 4 or the 1 hour. The longer the time frame, the less frequent your trades are. So for this video, we're just going to look at the 1 hour, okay? And there's all kinds of information here, all kinds of lines, you know, Christmas colors. Actually, I'm gonna get rid of that there as well. Okay, so you can use, if you've got a wheel on your mouse, you can use the mouse wheel to scroll, and you can condense and look at a longer view. But still, each candle, each little line, so these lines are called candles. Okay, each little line is a candle. Red is selling, green is buying, so up in price, down in price. And then these little tiny lines above the candle is the wick. You know, you have a wick on a candle. So here is the 1 hour chart, and this is Bitcoin right here. And we want to see what Bitcoin is going to do next. So drawing these lines, these patterns, is not really a crystal ball. It helps you determine what the market trend is, and this is all called technical analysis. Technical analysis is to help you determine what you're going to do when the market does something, what your reaction is going to be. So this helps give you an edge on the market. So over on the far left over here are all of your tools. And then up here, this little technical indicator icon, this is your indicators. Okay, so this is where you can add additional information to your chart. But for now, we're just gonna look at drawing basic patterns. So you go over here to your drawing tools, the very top. And when you hover over it, you're gonna see this little arrow. So if you click on the arrow, it gives you additional lines you can use. But for now, we're just going to use a basic trend line. And up here, you can change the color. So we're going to look for a pattern. And right now, I see an ascending channel. Okay, so this is, we're going to cover two patterns: the triangles or bull pennants and bear pennants, triangles, and then channels. Channels are pretty easy to see. And I see a channel right here. So we start with the top line. Now you can start at the wicks, or you can start at the top of the candle. So we're just going to start at the top of the candle, and we're going to click once. You don't have to drag, you just click it, drag your mouse, and then left click again, and it puts the line in place. We're going to do another one. Okay, so you need at least 2 touches or 2 points. So you have one here and one here. 3 is preferable. You heard that phrase that twice is a coincidence and 3 times is a pattern. So the more touches you have on either side, the more data, the more valid a pattern is. But here we are looking at a pattern. Okay, so this is a channel. It's about equal distance between the top and the bottom of the channel, the bottom and the top, okay? Looks pretty even. And it's a descending channel, so it's going down. So with a descending channel, usually what happens is on a descending channel, Bitcoin or the currency will go up in price. 64% chance that it will go up. Because when things go down, they eventually have to go up. We could also broaden this channel to here. Okay. So this looks a little more valid. Now, it doesn't always follow these rules. sometimes, because everybody who trades, everybody who does technical analysis understands this. And there are people who have lots of money that can make purchases or sales to move the market in a certain direction. But this just tells you the likelihood of what's going to happen. Okay. Now we also have this little pattern here forming, and we'll draw. Let's go on the wicks. Let's see, let's go down like this. It's got a wick right here. There we go. So this right here is a pennant. And these triangles, these pennants, when these are created on the downswing, this is a bear pennant. This likelihood is to go lower. So what does this all mean? When you draw these patterns, you see a pattern and you outline them to help you visualize the pattern. What does it mean? Well, it helps you determine what you're going to do. So how are you going to react to the market? So if the market continues to fall and you've got money on the sideline, what are you going to do? You're going to wait. You're going to wait for the coin to fall and settle. So if we go back in time, so you can change the size. So over here, you left click and then you drag. So you can squeeze it down or you can drag it up. So we're gonna squeeze it down just a little bit. Now we can actually move, click, and we can drag this whole screen here, okay? You can also highlight, click on these lines. You can drag them over. So if you wanna look at a different pattern, you can do that. So if we look at, say, this one here, let's move these over. Okay, here is a descending channel. Okay, so you have a descending channel right here, and this pattern changed right here when it moved up. So this area right here is called a breakout, and this is what you're looking for. You're looking for the price to break out of the pattern you created. It can break out going up or down. This is a descending channel, so you have 64% chance of breaking to the upside, which it did. And so this area right here is where you would buy in. So you would buy what's called the breakout. You buy the breakout, this area, and then you ride it up until it changes, until the pattern changes. Or what you can do is you can do a price target. So you bring another line and you start here at the top of your channel and you go to the bottom of your channel. Okay, and you drag that line over to where the breakout is, okay? So now you have the top of your line, which is your price target, and over here it gives you the top and the bottom. It highlights the difference between the top and the bottom of your line. So the top of your line is 46,416. So if you go over here, and if you notice you have your plus, your cursor is a plus sign, you have crosshairs, and then that moves up and down. So your vertical line is your time frame, which is down here at the bottom, and your horizontal line is your price. So at any given time within 1 hour increments, because we're at a 1 hour chart, it tells you what the price is. So if you look right here, this area right here, the movement went to your price target. Now, why does that happen? That's because there are a lot of bots or they're computer programs, algorithms, and AI is being used now. And they make lots and lots of trades per day, very quickly in small increments, especially with Bitcoin. And these bots utilize technical analysis. They're doing the same thing. And they're human beings that create these programs to watch for these patterns. So these computer programs do exactly what we've done right here. And that is how you can, in a matter of speaking, predict where the price is going to go. So we created this, we see this pattern, it's a descending channel. We create the lines, all right? Then we measure by going over here with our drawing tool. We just create a line from the top down to the bottom. We drag it over to here where the breakout is happening. And at the top of the line is where the price action started to settle. So you would put your limit order. So you create an order, and it basically tells the system when the currency hits a certain price, I want to sell. And then you can determine how much of your currency you want to sell. If you want to sell all of your Bitcoin or half of your Bitcoin, or you can type in a specific amount of Satoshis, a specific amount of Bitcoin to sell. You can sell it off. Now, nailing the top, okay, so if you see the top of the price target here, the price on this candle actually went above. That's called the wick. But the wicks are very volatile. They go up and down very rapidly. So it is difficult to nail the very, very top. So the money is made in between the breakout and your top wick, which somewhere in this area. There's a lot of buying and selling going on right here, just below the tops of the wicks. So you're more likely to sell your coins and sell all of your coins, however much you're trying to sell, at the price by allowing the price action to go through your order. So if you have an order right around here, the price action went right through it, and you're more likely to get a sale at your target price than trying to nail the top. So the money is made in the middle somewhere, okay? So then you have right here, what do you do next? So you have an ascending channel. Now, this is a shorter time frame, so you would look at maybe like a 30-minute or a 15-minute time frame. So you'd click up here and shorten the time frame. But basically, you have an ascending channel. And what happens in an ascending channel? So channel, 64% chance going up, so it's going to break lower. 64% chance it's going to break lower, which it did. And then it went back up. So in this kind of situation here, you see these little wicks, okay? And a wick is an indicator of a price reversal. So if you have this green candle and this long wick at the top, there's a good chance that the price is going to reverse, and it did. But it did so with indecision because you've got a long wick at the top and a long wick at the bottom, and people are not sure what to do. It's indecision in the market. The price started to go up, and people are like, oh my gosh, it's going up, and so they start buying, and the wick went all the way up to here. Okay, long wick, price reversal, goes down. Some indecision because there's a wick at the top and the bottom of this one. And then we have, it went sideways, some indecision, top and bottom. See, long wicks, top and bottom. And then it went down again. When it drops rapidly like this, people get fearful. Regular retail investors get fearful and they sell off. But when you have these long drops, you also have a bounce back up. But this, you're getting into day trading when you're looking at hourly time frames, short time frames. You want to basically go into your exchange. Go to Binance, utilize the tools in Binance, and just look for patterns and start drawing lines. And imagine what you would do if you see a pattern. What would be your action when something happened in the market? How are you going to react? So this right here is a triangle or a pennant, and it's a bear pennant. That means that the price had a long drop, and then it starts forming this pennant. This is a 68% chance of breaking to the downside because it's a bull pennant. Now, a bear pennant would be if the price went up and then started creating a triangle or pennant pattern. That's a bull pennant. That's a 68% chance of breaking to the upside. So in this case, if you were in a position and you lost some value here, and then it went up, and then it went down, and it went up, and it went down, and it starts getting smaller. See, down here are the volume bars. So you can see that the volume, the amount of trading is starting to decline. And the price is squeezing. See, the price action is squeezing. So the bars are getting smaller and smaller. So what are you going to do? You're going to react to the market. You're going to let the price action tell you what to do. So you would create a stop loss. So if it breaks lower, below this pattern, you would create an order that if it hits a certain price, say right now it's 46,492. So you would say, okay, you tell the system, okay, if the price hits 46,492, then I want to sell at 46,470. Okay, you want to have a little bit of a spread, because if the trigger price is too close to your actual sell price, it will fall through both of them and it won't trigger your stop loss, and then you'll ride the price down here. So you got to have a decent spread. So anyway, it sells into USDT, converts into USDT, and the price continues to fall. And as it's doing this, you're now creating a new pattern. You're now starting to see that it's a descending channel, and the descending channels have a 64% chance of breaking to the upside. So you'd create this pattern. You would see 1, 2, 3, 4, 5. So you have a good, valid pattern. And you would just ride this pattern down. It could keep going down until it doesn't. But when it breaks out, you're going to allow the price action to tell you what to do. So if it breaks out, you buy back in. And when you're buying back in, you're buying at a lower price than here. So yes, you may have lost a little bit, but you're going to recover your losses. So by doing this, by doing technical analysis, you're not going to win every time if you want to compare it to, Vegas or whatever, but it's going to increase your chances of profits. Doing technical analysis helps reduce your losses. And most of the time, 60, sometimes 70% of the time, if you get really good at it. But 65% of the time, approximately, you're going to win. So if you're winning 65% of the time, overall, you're winning. You're winning overall. So if you look at the longer time frame, you're winning overall. And every time you make these little trades, you're gaining more coins. You're increasing your coin supply. So when the price goes up, your value increases faster. So anyway, that is how you draw patterns. That's just two basic patterns and what the patterns mean and how to react to patterns. This is not a crystal ball, but it helps you visualize what's going on in the market and what to do when the price action goes in a certain direction. Technical analysis helps you decide how to react to the market. You allow the price action to tell you what to do. You don't predict. And when you see a lot of red. When the price is falling down, this is when you really want to pay attention. This is where you make a lot of money, is when the price is falling dramatically, because people, general people, get scared. And the wealthy people, they see opportunity. They get excited. So you want to do what the wealthy people do. Don't follow the herd. Don't follow your neighbor. Do the opposite of what everyone else does, because the herd 9 times out of 10 goes in the wrong direction, and they end up falling off the cliff and riding the losses. When you could have sold up here, or sold into USDT, into Tether, or to stablecoin, and then watch the price fall and bought back in down here at a cheaper price, and you just increased the number of coins you have in your bag. So that's the video for today. I hope you liked it. If you have questions about it, please leave a comment under the video and I'll try to reply. Thanks and have a great day.